Simple, and today we are talking about semiconductors. This is a topic that we've covered once or twice in the past, but today some breaking news has thrown this industry back into the spotlight. So, I want to get to cover with you all a little bit more about semiconductors, which companies are involved in what's going on right now, the major economic changes that are bringing this topic to our attention, and share some thoughts and opinions of what might happen next. So let's dive right in. Please remember, this webinar is meant for educational purposes only. We will look at some past results, and I will share some things such as my opinion of what's going on. Whenever we do that, it is not meant as a recommendation to buy or, in a lot of cases today, sell a certain stock. Instead, they are meant to help inform you, to hope that you make a more informed investment decision. So today's topic is an update on the semiconductor industry. So we're going to review what semiconductors are, highlight some of the key companies within the semiconductor industry, and why semiconductors are one of the most important industries in 2025. Then we're going to get to cover the negatives or drawbacks of the semiconductor industry and look at some of the challenges that they're facing. Then we're going to dive into the current events side of things, which is the CHIPS and Science Act, why that matters for investors, the importance of upcoming tariffs on the semiconductor industry, and what that might mean for investors. Finally, the big highlight, or rather the big breaking news, is Intel's potential deal with the US government, where the US government is seeking, 10% ownership in exchange for $6 or $8 billion. Sounds like an episode of Shark Tank, but it's our episode of Sectors Made Simple today, because that's what's happening in the stock market. Let's dive in. But before we do, I do want to have a second disclaimer here. I know, bear with me. Most of today's webinar is going to focus on things surrounding politics. Our goal is not to choose sides in politics, not to argue one side is better than the other. Instead, we don't want to have our agree or disagree be the focus. It is not meant to criticize or commend one person or administration. Instead, our goal is just to cover major events that are impacting our economy and our stock market. So that's where I want to leave the focus. I want to leave politics out of it. We will have to talk about political figures, but it's not meant to be criticizing or commending one party or another. And I ask that you limit any conversation in our live chat to avoid politics as well. There's enough of that everywhere else in the internet. This is our fun place to come and talk about the stock market, so I want to leave it with that. Let's focus on the impact of the events instead of the politics of the events. And as I've always said, I don't like to look at things in red or blue. I like to look at things in green. Show me the money. That's what I care about. Let's start off with the basics. What are semiconductors? Semiconductors, funny enough, it's a very misleading name, because what we think of when we think of semiconductors isn't what semiconductors really are. So here is the common sense definition of semiconductors. It's a building block of modern technology. Semiconductors are the pieces that we put together to make everything. And the actual word semiconductor is just a type of material that is neither a conductor, such as copper or aluminum. Think of things that if you touch it, if you rub your feet on a carpet and then you touch it, it would shock you. Those are conductors. Think of things that you might wear if you are trying to jumpstart a car, like leather, or rubber gloves or oil. Things like those are insulators. A semiconductor is a material that is neither an insulator or a conductor. It's a semiconductor. Now that we've gotten that part of it over with, we don't usually think of semiconductors as just simple metals. We usually think about what those materials can create. And what they can create is literally anything. We use semiconductors to make everything from phones to computers to cars to the microphone I'm using to record this, all the way to, well, everything. We live in a modern era, and anything that is electronic, even if it has an on-off button, that on-off button has semiconductors. They can vary from a simple transistor, something like an on-off button to turn on your computer or your phone or your garbage disposal. All of those are technically semiconductors. But they also get a lot more complex. And some of them, including graphics cards produced by a small, unknown company known as NVIDIA. Some of NVIDIA's graphics cards can be so complex that they have 75 billion transistors per square inch. That number seems so insanely difficult to think about. But imagine what a square inch looks like. You take 1 inch by 1 inch, and you shove 75 billion little switches in there. That is what modern semiconductors can do. Or rather, what we can use modern semiconductors for. So, while they started off very simple, this industry has grown into something incredible, where the reason that we have so much power at our fingertips is because we figured out how to take billions of tiny little pieces and put them into something that we can then carry around in our phone. So the modern semiconductor industry, as far as the stock market is concerned, although it is very big, is also only a select group of companies. Currently, there are 67 publicly traded semiconductor companies. And those 67 companies have a combined market cap or value somewhere around $8.5 trillion. Not a lot of companies, but a whole lot of value, and that's why this is such a big topic. These companies have grown and exploded in popularity, largely due to the rise of AI, such as ChatGPT, DeepSeek, and Gemini, and all of the AIs that all of these big companies are trying to come up with. AI is trained using some of the fastest, most powerful computers we have available. They are doing millions, if not billions, of different calculations every second to try and learn, try and take in more information and become more powerful. This sounds like the beginning of some supervillain story, but instead, it's one of the largest industries in the world. And that rise of AI has helped to boost the value of companies that are at the center of this entire movement, such as NVIDIA. NVIDIA started off as a relatively small computer part manufacturer making graphics cards. Graphics cards, the name is a pretty good indication of what it does. The graphics card that is in your phone or in your computer is the reason that you can see this webinar. It's the reason that I can see the screen in front of me. It takes in information and then gives us a picture. At least that's where it started. The thing about it is, graphics cards are typically the strongest part of the computer. It's the fastest, it asks for the most power. It is where the magic can really happen. And that's why we started using it for things that aren't just putting an image on our screens. But before we dive into the AI side of things, I want to cover the semiconductor companies, because it's very important that we make a distinction. Some companies that we think of as semiconductors aren't actually semiconductor companies. Collect ourselves for a moment, but that's true. There are a lot of companies that you think manufacture their own chips, but they don't. They hire another company to manufacture their chips for them. So you might think that it's just the little guys, smaller companies in the semiconductor space that don't have the money or the ability to produce chips. But that's not really true. In fact, NVIDIA, the $3 trillion chip company that we think of as the poster child of the semiconductor industry, they don't make their own chips. Instead, they send the requirements and they ask the company, Taiwan Semiconductor Manufacturing. Often we'll see this as TSMC, but their ticker symbol is TSM. Taiwan Semiconductor are the ones responsible for producing and manufacturing all of the chips that NVIDIA uses for everything from our computers to our supercomputers for AI. But they're not alone. I wanted to highlight a few other companies that may or may not be semiconductor companies, but you think of as producing chips, components, semiconductors for modern technology. Companies like Advanced Micro Devices, AMD, Apple, Meta, and Google. All of these companies you think of as being computer manufacturers, except Meta. But all of these companies are producing chips, but they don't make them themselves. Instead, they hire Taiwan Semiconductor Manufacturing to make all of their chips for them. So let's cover some of the biggest companies in the biz, starting off with the actual chip manufacturers. It's great you can come up with a recipe, but who's farming the crops? Who is giving us the ingredients? We have Taiwan Semiconductor and Texas Instruments. Those, for the US stock market, are the two largest and two of the only chip manufacturers, meaning they actually have all of the hardware to make these chips themselves. The third is Samsung. Samsung is not a US publicly traded company. Instead, it is one of the largest companies in South Korea and is one of the largest chip manufacturers in the world, behind only Taiwan Semiconductor Manufacturing. And now the list of people that use semiconductor products. This one's a lot longer. Intel, NVIDIA, Broadcom, AMD, and Qualcomm. These companies are still within the semiconductor industry. If you go and look at the ETF SOX, SOXX, that is the semiconductor ETF. All of these will be holdings within that ETF, except for Samsung. So all of these we consider semiconductor companies, but only a few actually produce the chips. Most of these guys, they go to Taiwan Semiconductor for all of their goods. But why? Why, if AI is an $8.5 trillion industry, or rather, semiconductors are an $8.5 trillion industry, surely NVIDIA has the money to start manufacturing their own stuff? If they don't have the money, who in the world does? Well, here's the thing. Manufacturing semiconductor products is extremely difficult, at least in the ways that we do them today. Back in the day, it was a lot easier because parts were a lot bigger. But now, it's gotten so complex that we need expensive, advanced machines that only one or two companies in the world can build. We need to train people on how to use these machines, how to research new technology, and how to turn that idea into a product. That is incredibly expensive and very time consuming. And currently, the US only produces around 6% of the global supply of semiconductors. Taiwan produces 60%. But again, we covered earlier, semiconductors are a big blanket term. If we looked only at the type of chips that we need for computers, for cars, for phones, if we only looked at those chips, Taiwan produces around 90% of the global supply. But we can get even more complex in the idea, not the actual understanding of it. There is a type of production where the way that they say what they're doing is just like we would say, oh, I'm day trading. Oh, I'm trading options. I'm trading ETFs. We can see what these manufacturers are doing based on the sizes that they're working with. Are they working with Legos? Or are they working with those giant Duplo blocks that you probably gave a 5-year-old so that they wouldn't try and eat it? Most people are probably playing with the Duplo blocks. Taiwan Semiconductor, they're playing with the most advanced Legos in the world. The size that they are working with, those little transistors we were talking about before, they are 3 nanometers. For some idea of how small 3 nanometers is, a piece of hair is somewhere between 80 and 100,000 nanometers. The reason I'm saying 3 nanometer isn't because that should mean something to you or because it's going to come up when you're thinking about investments. The reason that I'm saying that is so that we really understand how small all of these parts are. We are creating parts that are over 20,000 times smaller than the width of a hair. Tiny. And that should really give us an idea of why it's so difficult to be a chip manufacturer. You're trying to compete with Taiwan Semiconductor Manufacturing, who's creating these tiny little Picassos that we then can shove into a computer, give a bunch of power, and have it create the next ChatGPT. Trying to compete with that is difficult and is basically impossible. So, the semiconductor industry is highly complex and unfortunately is also highly sensitive. It is very, very fragile because these advanced chips require a ton of different materials. Silicon, gallium, germanium, all of these different materials have to come from different places. And most of them, honestly, come from China. China owns the majority of the market for most of the metals and materials needed to make semiconductors. And that means that these supply chains, meaning how we get the materials to make the product, they're weak. They are really vulnerable to things such as tariffs and trade disputes. If we're arguing about prices, or if we're trying to say that thing is going to cost 50% more, that's going to make this industry weaker. But also global conflicts. One of the main reasons that, or a big talking point in the war in Ukraine right now is the fact that Ukraine has access to rare earth metals, many of which are used in the production of computer chips. That's part of the reason why we're so interested in having access to Ukraine's rare earth element materials. The same reason why trade talks with China are so important, because China is one of the largest suppliers of many of these materials, and we can't get on their bad side feels like the wrong word, worse side than we already are. But the biggest one is the rising tensions between China and Taiwan. That is a story for a way different day and also a different channel. We're not going to get into the politics of the conflict in East Asia between Taiwan and China and all of that. We're going to leave it at they're not friends. And that means that trading between them and also Taiwan trading with any other country is going to be really tricky. But let's bring things back from overseas and let's talk about the United States, because we are hungry for chips. Over the past decade, these chips have become more and more complex. And because of that, it's made it harder for new companies to manufacture their own parts. We talked a little bit before about that 3 nanometer process. If the best you can do is 10 or 15, you're playing at a disadvantage. But as technology started to become more and more advanced, we needed more powerful computers. The amount of stuff that your computer can do today is insane. For example, have you ever tried opening up that 10-year-old computer that you have and just tried going to Google and using the internet on that computer? It is so difficult because what we think of as just go to Google, type in a website, the website loads. It's only that fast because our computers are that fast. Try and do that on a 10-year-old computer and you might as well go make breakfast while you're waiting for your emails to load. Technology doesn't scale at the same rate over time. It skyrockets. So what's happened is that new companies have tried to enter the market and they failed. But the people that have succeeded the most aren't the ones that have the best ideas. It's the ones that play the smartest. There has been a rise of companies that are known as fabless. Not fabulous, fabless, which just means they don't make their own chips. Companies like NVIDIA will develop, research, and come up with an idea for a chip, give good old Taiwan Semiconductor a call, and say, hey, I've got this idea for a new chip. You have the machine to make it. Let's team up. So these fabless chip companies aren't just small nobodies anymore. They are NVIDIA, they are Google, they are Meta, they are AMD. All of these major companies don't manufacture their own chips. They just get Taiwan Semiconductor to do it for them. And that's helped to power the rise in demand for new technology, such as mining cryptocurrency. If anyone tried buying a computer in 2018 to 2021, you would know how difficult and expensive it was because everybody wanted to go mine some cryptocurrency. It was the digital gold rush, and a lot of people made a lot of money, and a bunch of other people struck out. But here's the big one. AI. Bet you didn't see that one coming. AI is the big hot topic, and nothing has changed. ChatGPT, in my personal opinion, was the beginning of the AI boom. In November of 2022, OpenAI released their groundbreaking product, ChatGPT. ChatGPT is known as a large language model, or LLM, meaning it's an AI that can take in a question or words and then output an answer. That answer could be a story. It could be an email. It could be a song. It could be a picture. What ChatGPT and LLMs can do is insane. But it didn't just come up with this. It's not a human that they stuck inside of a room, gave him a computer, and said, go answer the world's questions and stupid requests. It was a computer that started off knowing nothing. The only reason why it has learned, the only reason why it is what it is now, is because it was trained. It learned off of what we taught it. And that took a lot of power. It was trained using 10,000 of NVIDIA's most advanced processors, or GPUs. And it cost over $200 million to do. That is incredibly expensive. And as I've gone into in detail in other webinars, ChatGPT is not perfect. It doesn't understand what it means to feel emotion. It doesn't understand the idea of time. Go to ChatGPT and ask it to show you a picture of a clock that says 4 p.m. It can't. What it will give you is a picture of a clock that shows the time 10:10. The reason is because we never told it a clock is a way to show time, where one hand moves with seconds, the other one moves with minutes, and the third one moves with hours. We didn't tell it that. It doesn't know that. All it knows is that we gave it a bunch of pictures of what we told it was a clock, and if you ever have gone to an advertisement for a watch, watches will always show you one time. We make this a little bit bigger. How did they make it smaller? Anyway, you get the idea. 10:10. 10:10. 10:10. 10:10. So ChatGPT learned that. It learned if we want a clock, this is what a clock looks like, but never the idea that the watch represents time, and if I tell it 4 p.m., I want it to move those hands on the clock. All of that is basically just to say that AI was really, really good and is getting better, but it's also only the beginning. The AI boom has continued, and new companies have tried to enter and compete with ChatGPT, and some of them have. We've seen Google's Gemini become one of the best out there. Claude is another incredible GPT that's available, but all of them have one thing in common, besides the fact that they think a clock is only 10:10. They all used NVIDIA. I get asked a lot, if I wanted to invest in the AI boom, who should I invest in? Should I be looking at new companies coming out with AI? Should I be looking at AI companies? And here's what I told them. This is my personal opinion. Please remember, personal opinion here. We are watching a battle between different AI companies. And why would we try, let's say it's a race between AI companies. Instead of investing in which car we think will be the fastest, why don't I invest in the company making the car? Because then the easier it becomes to compete, the more people are going to buy a car and enter the race. The more simple it is to get started, the more accessible these races are, the easier and easier it will be for people to jump in, and every one of them is going to need to buy a car. And if I own the company that is making those cars, that's a good place to be. So NVIDIA led the rise of semiconductor companies because most of the large language models, they're all privately traded. You can't go and buy stock in them. But thankfully, the companies that build the computers for AI are publicly traded. And it has helped to rise up this entire industry. Over the past 3 years, the semiconductor ETF SOX has risen by 146%, with key companies such as TSM, Taiwan Semiconductor, rising 280%, and of course, our friend NVIDIA, almost 1,500% since October of 2022. But here's the thing, and this is the biggest risk in my opinion. This industry is the peak of growth valuation. Many people don't call it the AI boom, they call it the AI bubble. Just like they called it the dot-com bubble. And no one knows if or when it's going to pop. Do I think it's a bubble? Personally, no. But just looking at some of the numbers, it is definitely very, very expensive. If we looked at the price to earnings ratio of the S&P 500, if you don't know what that is, the higher the number, the more expensive something is. The price to earnings for the S&P 500 right now is around $29. So for $1 of earnings, you have to spend $29. SOX has a price to earnings ratio of 35.66, meaning it's more expensive to buy SOX than it is the S&P 500, and NVIDIA has a price to earnings of 56.6, almost double the S&P 500. Does that mean NVIDIA is a bad company? No. At least, in my opinion, no. The way to think about P&E is not more expensive is a worse company. Sometimes we don't mind paying for a nicer thing. If we think that company is going to have better growth, is going to be a stronger company long term, sure, we don't mind paying a little bit more for it. The reason that I'm putting these numbers up here is not to say that NVIDIA is a bad company or SOX is a bad ETF. It's to show that if we only look at the value of NVIDIA, the value of NVIDIA is because what people think AI can become. It's not because of what AI is today. So NVIDIA having that high of a price to earnings means that if something bad happens, that value can disappear fairly quickly. And DeepSeek was a perfect example of that. This is a topic that we covered in a webinar earlier this year, but comes back for round 2 in this webinar. In January of this year, a Chinese company called DeepSeek released their version of ChatGPT called R1. R1 didn't just threaten the AI boom here in the United States because it was as good as ChatGPT, which, by the way, it was. DeepSeek had created a model that could compete head-to-head with ChatGPT. But the reason that it was such an incredible, groundbreaking thing was because DeepSeek claimed that they trained R1 with just $6 million, compared to the $100 million for ChatGPT 4 and the $200 million for ChatGPT 1. So, all of a sudden, the AI revolution has changed. Instead of every person in the race needing to buy their own car, what they did was 5 people started sharing one car. And all of a sudden, that car company manufacturing those cars was selling 5 times less cars. That's what was happening here. If R1 was able to be trained on far fewer cards, on far fewer NVIDIA processors, we didn't need to buy as many. If we're buying less NVIDIA cards, then NVIDIA is not making as much money. if Nvidia is not making as much money, its share price is going to go down. And that's exactly what happened. The day that this came out, it skyrocketed to one of the most downloaded apps in the United States. Nvidia's share price fell 14%, one of its worst days in the past 10 years. And SOX, the semiconductor ETF, fell 7% as well. Now, this part didn't make it into that earlier webinar because we didn't find this out until weeks later, but surprise, surprise, they lied. DeepSeek did not train a model on $6 million. They technically did train it on $6 million, but that's not really fair. Because they didn't really include the few $100 million they spent to create the information that R1 used to learn. It's like saying, oh, this chef, his dish costs $200, or a dinner at his restaurant costs $250. I can make the same thing at home for $6. But the reason the chef has a job is because he went to culinary school for $300,000. Same idea here. All they looked at was the price of the meal. They didn't think about how much it cost for the person to go to culinary school, become a chef, train up to the final position that they're at in order to charge $250. So, in reality, this whole thing was publicity stunt isn't the right word. A bit of a lie. A lot of bit of a lie. But it didn't matter. The damage was already done. Nvidia's share price fell 14%. It showed that the AI giant can bleed. We went from thinking that Nvidia had this entire market in the palm of their hands. And all of a sudden, we asked ourselves, what if Nvidia isn't the giant that we think they are? In my opinion, they still were. They still are. But it put the doubt in our brains for the first time since the AI boom began. What if this entire thing collapses? But then a new threat emerged. This one is a little bit more real than R1. Tariffs. Tariffs, specifically import tariffs, have become the topic of 2025 because the word is getting thrown around left, right, and center. And also, there's a lot of confusion or misinformation about what tariffs actually are. So let's cover that. Tariffs, or import tariffs, are a tax that is put on things that are imported into the United States. So if I want to get a bottle of maple syrup from Canada, and that bottle is $10, if there is a 50% tariff, I have to pay a tax of 50% of the price, meaning $5. So now that bottle of maple syrup cost me $15. Here's the one that people tend to forget or not realize. That tariff is paid by the US company. The Canadian company that sold me that bottle of maple syrup, they didn't pay that $5 tariff. I did. But also, ignoring if the importer or the exporter pays the tariff, here's the bottom line. It doesn't matter who pays the tariff, because all of a sudden, the cost to get you that product increased, and there is not a single company in the world that is just going to say, oh, well, we're going to make less profit, or we're going to turn a loss because of tariffs. That's okay. No. If the thing costs 30% more for them to make, they're going to charge you 30%, if not 40% more for that good. So ultimately, it doesn't matter if the importer or the exporter pays the tariff, they will always pass that increased cost to the consumer, you and me. Now, again, I'm starting to look very critical here of the current state of tariffs. I want to show both sides. Trump did not invent the idea of tariffs. Tariffs were and are fairly common because they're used to protect US industries. For example, maple syrup. Maple syrup is one of the largest illegal imports from Canada to the United States. Why? Because there's a pretty big tariff on importing maple syrup from Canada to the US. The reason that tariff is there is because there's a bunch of farmers up in Vermont and other places in the United States that can manufacture maple syrup. We do that to protect things that we make here in the US that we don't want to lose because someone else can make it cheaper. So tariffs are not a new idea. They have been used for decades to help manage prices and protect the US industries. So my issue isn't with tariffs. The thing that I kind of get a little bit scratchy on is the information or disinformation about who pays those tariffs. And at the end of the day, we can agree or disagree, but you and I will end up being the ones to pay the tariffs. And that leads us into semiconductor tariffs. Because guess what? Semiconductor tariffs are coming. Last Friday, which was August 15th, Trump announced a 100% tariff on semiconductors, meaning if you imported a $10 semiconductor last week, in 2 weeks from now, that same thing would now cost you $20. $10 for the product and another $10 for the tariff. And the tariff would start off low and get bigger over time. The numbers that he suggested were 200 to 300%. So all of a sudden, with a 300% tariff, that $10 item would now be $40. Now, there's a reason for this. Trump wants to help companies move production of chips to the United States. So companies could avoid these tariffs if they made commitments to build up manufacturing for chips and semiconductors here in the United States. The only issues I see with this are that we don't know what commitment means. Is it just a handshake? Is it a signed agreement? Is it actually putting money into a building? There's no knowledge of what committing to building something in the US really is. And also, he's reinventing the wheel here. This isn't the first time a recent president has tried to incentivize or tried to push chip manufacturers and semiconductor companies to the United States. The CHIPS and Science Act was a piece of law signed on August 9th, 2022 by then President Joe Biden. It created over $50 billion in funding, education, and incentives for companies that were willing to move some chip production here to the United States. And immediately, there was a lot of interest. Taiwan Semiconductor announced a new plant in Arizona. Intel has been the largest chip manufacturer in the US for decades. Of course, they're not going to pass up on some free money. And even the South Korean Samsung announced plans to build chip manufacturing here in the United States, with each one of these giants earning over $6 billion in funding. But when Trump took office in January, he immediately began to criticize the CHIPS Act, referring to it as a horrible, horrible thing, and taking away that money that was promised to these companies in exchange for building here in the US. Or that's what we thought until today. And this is where things get really interesting. Today, on August 19th, Intel announced two major things. First, SoftBank would be investing $2 billion into Intel. And also, Commerce Secretary Lutnick stated that the CHIPS Act is still alive. But it's a little bit different. If a company wants to get that federal funding, wants that money to help build here in the US, they've got to pay up. Not with money, but with a piece of their company. So just like an episode of Shark Tank, Intel showed up in front of the sharks, said, "Hi, my name is Intel, and I'm here seeking 10% ownership of Intel in exchange for $6 billion. This is not crazy in the world of private equity and private businesses. It is absolutely insane for the government. I did a bunch of research to try and see, has this happened before? And the answer is yes. It's happened a few times, but under very different circumstances. This is the first time in history that the United States government has asked for partial ownership of a company in exchange for funding, except in wartime, during World War I and World War II, the United States took over some companies, such as coal production facilities and manufacturers, to help with the war effort. And also during financial crises, like in 2008, with the federal bailout of Freddie Mac and Fannie Mae. Outside of financial crises and war, this has never happened before. We've never seen a private company be asked or even give up a percent of their company in exchange for federal funding. And unsurprisingly, the stock market reacted. But the reaction was fairly divided. Intel surged with the announcement, with the stock price for Intel rising 7% pre-market and closing somewhere in the range of 6.5% gain. Meanwhile, the rest of the semiconductor industry didn't enjoy the same results. SOX, the semiconductor ETF, fell 1.6%, and Nvidia and Broadcom, ticker symbol AVGO, which are the two largest holdings in SOX, both fell around 3.5%, with AMD, the third largest holding, falling more to 5.5%. Now we start to get a little bit more into speculation. I want to cover some of my opinions of the reasons that Intel enjoyed a 7% gain today. Intel has kind of been the black sheep of the semiconductor industry. I want to show you a pretty interesting graph. Let's go to stock charts together. And by the way, in classic Jonathan fashion, we're doing this completely unprompted. I have no idea what this chart's going to show. I've got a pretty good idea, though. Let's go here, and let's look at SOX, NVIDIA, AMD, Broadcom, Taiwan Semiconductor, and, of course, Intel. If we look at the prices over the past, let's say, year and a half or so, as I play whack and add, there we go. AMD has had a pretty rough road. Broadcom, NVIDIA, TSM, and even SOX have all enjoyed 20% gains over the past year and a half. Even AMD, who had their fair share of problems earlier this year, still is posting a gain of around 8% over the past year and a half. But then Intel. In mid 2024, Intel's price collapsed, fell 43%, and while it's had some attempts at recovery, its share price is still down 30% over the past year and a half. And if we expand this further back, it doesn't get any better. Intel has had a really, really rough go. And in fact, they have recently announced that they're firing 22% of their company before the end of the year. They had a new CEO step in March who has been trying to make positive changes in the company. And from what I've seen, he's not doing a bad job. But they still have a lot of issues. They're still using 10 nanometer logic, which means we have 10 compared to 3 that TSM is able to make. So they are falling behind because they can't compete with Taiwan Semiconductor. And also, a lot of their recent product releases have had massive, massive issues. Their manufacturing has had a lot of errors. A lot of their products have had to be completely redone because they had issues. One of the main issues was, well, the computers are overheating themselves. It's pretty bad. So Intel's down around 49% over the past 5 years, and in my opinion, a 7% gain is really a drop in the bucket. It does very little to help Intel really show recovery, and it's still in a very rough spot. Romulo's asking PLTR or Palantir. So Palantir is a technology company. Their focus is more on the software and data analysis side of things. They aren't a semiconductor manufacturer or a hardware manufacturer. But great question. Funny enough, Palantir has one of the highest price to earnings ratios in the entire stock market. Sorry, not whole stock market, the S&P 500. Their price to earnings is a very calm and relaxed $524. So for every dollar of earnings, you're paying $524 per share. A lot. But Palantir is not really included in a lot of this because they are more on the software and data side of things. They don't really fall into the same grouping as semiconductor companies like AMD, Taiwan, even companies like Google or Apple. So the reasons for Intel's decline, frankly, the company is struggling. So it's not really a surprise to me to see their stock price show some positive gain today with the announcement, because at this point, any news that is not a complete collapse for the stock is good news. Qualcomm, great question. That is definitely a semiconductor company. So if we add that in and we go back to like 300 something days, it's in a similar boat to something like SOX. Very similar performance to SOX. So if anything, if I were looking at this and I wanted to just find a single company that's close to the results of SOX, Qualcomm's probably that. Great question. So now let's dive into the SOC drawer. The reasons that SOX declined today should be very straightforward. 100% tariffs and worse is really, really, really bad. Also, there's the realization that federal funding is no longer just incentives. It's not a carrot that is trying to entice you positively towards something. Instead, tariffs are the stick. Tariffs are the punishment for not doing what Uncle Sam wants you to do. That is really bad, Because if you want the carrot, if you want that federal funding, you want to avoid tariffs and you want to help raise money to build that new facility, apparently you're going to have to give up part of your farm. You're going to have to give up a part of your company and sell part of your company to the government in exchange for that funding. And even if tariffs were removed for companies that produce chips in the US, those supply chains are going to suffer. We've talked about how many different places we need to get stuff from to make these chips. All of a sudden, we need to figure out how to get them to the US, not Taiwan. It's going to be more expensive. All of a sudden, we're thinking about Arizona instead of the west shore of Taiwan with one of the busiest ports in the world. And while all of these manufacturing plants are somewhere in the process already, keep in mind, TSMC started their production of US facilities years ago. One of their plants was finished this year. The building is done, the parts are there to start manufacturing chips, but they can't begin manufacturing chips for another 3 years. Their other plant that they're still building and finishing this year, that won't even start until the end of the decade. So yes, it's great that these companies are moving to the US, but it's going to take 3 to 5 years before they can even start manufacturing parts here. And again, we don't know what cooperation with this government is, so we don't know, is it once they start producing chips here that those chips aren't tariffed? Is it if the company has committed to this plant that all of their products are going to be cheaper? We don't have any of the answers, but the punishment for not knowing the answer is coming up next week. So my opinion is that what's going on right now is concerning and is worth keeping your eyes on. It sets a very dangerous precedent that the US is not providing positive incentives like the CHIPS Act, and instead, all we get to know is that there's punishments for not doing as we are told. And again, a lot of this is relying on the Trump administration being able to properly handle those exemptions. Is it only the stuff manufactured in the US or anything that company produces as long as they are building something in the US? We don't know that. But if their goal is true, if they do lower those tariffs for companies that are manufacturing in the US or are planning to manufacture in the US, decreasing our reliance on Taiwan's industry is going to be very valuable. I was a huge fan of the CHIPS Act. I'm a huge fan of bringing semiconductor manufacturing here to the US. But again, there's the carrot and there's the stick. I definitely would prefer the carrot over the stick. But regardless, this is the plan that is in front of us. And that plan is still a 5 to 10 year plan at best. And in the meantime, I cautiously and honestly anxiously await the full announcement of semiconductor tariffs next week. I wish we could end things on more of a positive note here, but this is a topic that I really feel like is important to understand because many people either are invested in companies like NVIDIA or are very interested in things like AI and the AI boom or bubble, depending on your standpoint. And while it's not positive, what's going on right now is very, very big news and is worth keeping your eyes on. Because whatever's going to happen this week and next week will impact major companies like Taiwan Semiconductor Manufacturing and most importantly, NVIDIA. And rest assured, we will continue covering all of this in both our webinars and our YouTube shorts, where you can stay more up to date on our regular content, including a YouTube short on this topic that we posted earlier today. But unfortunately, that is all the time that we have for today. Thank you all so much for joining us for this topic. I apologize if it was a little bit more on the information dense side of things, but I wanted us to understand the full context of what's going on who is involved, and why it matters for both our everyday lives and the products that we use, and of course, our investments as well. If you have any questions or want to talk about what we discussed today, feel free to give me an email at support@sectorsmadesimple.com. Thank you all so much, and I hope to see you all back very soon.